Hey guys, welcome to this evening's live stream. It is Sunday. I'm right here in my temporary office location in Phoenix, Arizona, ready to dive into your questions. Just want to remind all of you to check out Rebel Capitalist Pro. It is the amazing online membership program I have with the genius herself, Miss Lynn Alden, and the OG Rebel Capitalist, Mr. Chris McIntosh. You guys got to check that out. And by the way, if you haven't seen Lynn's most recent paper on quantitative easing and bank reserves and inflation, deflation, and broad money and base money, you've got to check that out at her website. I just retweeted it, so check that out on my Twitter feed, or you can go to her website. I think it's her most recent blog post. But check that out and check out Rebel Capitalist Pro. That's at georgegammon.com/pro. Let's dive right into the questions. Oh my goodness gracious. Tuesday is the election. Oh man, here in the United States, what are you going to do? You know what I'm thinking about doing is going out with a camera guy to the election sites and going out there with like a microphone, or maybe I take my boom mic here, but going up there and like asking people questions as they're standing in line, just to see how good of an understanding the average Joe or Jane, general public, has on things that we all think matter, such as the Federal Reserve. I'm curious how many people out of 10 people that were standing in line to vote, how many of those people do you think would even know what the Federal Reserve is, or even have ever heard of the Federal Reserve or quantitative easing or the federal budget deficit, or, you know, they just, well, we'll see. I'm going to try to go out there on Tuesday and turn it into like a video for the YouTube channels. So that should be interesting. All right, guys, let's dive into your questions. Let me go right to the top. We've got question Jan Valdez. Hey, George, thanks for all your videos. Meet Kevin thinks that the real estate will dip 10 to 30% between January and March 2021, and then go back up to current prices. What do I think Kevin's fantastic. I think Graham Stephan are fantastic at what they do. They're quite literally YouTube geniuses. That said, I don't know if I agree with all of their opinions on the stock market and on how to invest. I think I would like to know Kevin's rationale for that based on the data. I think if you look at a chart of real estate in the United States adjusted for inflation going back to 1900, and how you just pick out 10 to 30% out of the hat, that's kind of a random number. To get back to their historic trend lines, they got to come down by 50%. So that's adjusted for inflation, of course, in real terms, not in nominal terms. And I'm assuming he's referring to nominal terms. But I don't know what his rationale is for that. So maybe he's got a fantastic argument that I just don't know about, and he's using some charts or some data that I haven't seen. But I don't know that I don't agree with his whole view on, I just don't know that Graham and Kevin have a super in-depth knowledge of macro. They're incredibly smart, and they're quite literally geniuses at YouTube, at the YouTube game. And I think they know a lot about macro, but I think they might know just enough to be dangerous. And that's not a knock on these guys, because I've got a lot of respect for both of them. So I just don't know that I'd put a lot of thought into his macro predictions. How far will the Treasury yields be allowed to rise before the Fed implements yield curve control? There's so many different cross currents, because see, they've got to try to prop up the markets, meaning the bond market and the equity markets, and they have to keep the short end of the curve. When you say Treasury yields, you got to be a little more specific on where you're talking about in the curve, because they really have to be cognizant of short-term rates because of how much debt the government has to roll over. Most people don't think about that. They think they see 27 trillion in debt and for the federal government, and they assume it's like some sort of 30-year fixed rate mortgage, which it's not. They roll over a lot of it's short term. So let's say $10 trillion a year they have to roll over. Well, they got to keep those short-term rates low because the government, sure, they can afford to do it, but my goodness gracious, they would have to, just the debt doom loop vortex would really get out of hand because they'd have to issue so much more debt to roll it over to higher interest rate, and then it just really gets ugly. So, and let's not forget the Fed doesn't necessarily have total control over the short end of the curve. Let's not forget what happened in September of 2019 when repos spiked up 10%. What happened to Fed funds? Boo! Went straight out of the Fed's range. So they can lose control over that short end. They can lose control over Fed funds. And it's happened before. So anyway, my point is that I don't know, if you're talking about 10-year, 30-year, that's a lot different than the short end, like Fed funds. I don't know that there's a number. I think they'd have to see what's going on with the stock market, with the bond market. Is there any liquidity in the bond market? Then what's happening with the national debt, how much they have to roll over. I don't see them allowing the 10-year to go above maybe, I was going to say 2%, but the last time I spoke with Groman, he had a great argument that he said every time they do this and add more and more to the deficit and more to the overall debt, and they roll over more of these treasuries, the government, the kind of the bogey is the term he uses for what the interest rates or the markets can handle as far as interest rates going up goes down. It's just like the economy is the heroin addict, and every single time that it needs another shot of heroin, it has to have more and more and more. And every single time the economy gets addicted to the interest rates being that low, that means the ceiling for those interest rates gets lower and lower and lower before the whole thing blows up. Before the cerveza sickness, it seemed like the line in the sand for the 10-year was, or at least Fed funds was right about, call it 2%. So I don't know what the 10-year got up to. I can't recall. But that's kind of where the line in the sand was before the market started to deteriorate. And that's what the Fed, they're going to try to prevent that from happening at all costs, because they know the entire economy just is completely built on asset bubbles, debt, and confidence. So is that number 2% anymore? If Groman's right, no, it's maybe 1%, 1.5%. So, but to answer your question specifically, I don't know exactly where the number is, but it's nowhere close to quote unquote normal. If you look at what interest rates have been historically, Fed funds right around 4 or 5%. What would the effect on the non-US country? See, what would the effect on a non-US country if oil was no longer sold in US dollars, but every country's currency? I think the biggest impact would be if the country had a tremendous amount of dollar denominated debt, because if you're not trading oil in dollars. There's going to be a lot less demand for dollars. Theoretically, the dollar goes down in value relative to other currencies, or the cash flows coming into those corporations or countries that have the dollar denominated debt. Therefore, the debt burden goes lower. So they have, they're more competitive than they, or maybe not more competitive, but they've got a lot more wiggle room than they would now with just this overwhelming burden on their shoulders of the US debt, because all their cash flow is in a currency that has gone down in value against the dollar, call it 25, 35, 45% since they took out all this debt 2012 to 2014. If my memory serves me, I don't have the chart in front of me, but something like that. So that would be, I think a lot of countries would that would be very good for a lot of countries. But then other countries, trying to think of countries that wouldn't benefit. I mean, the United States, that would be really tough on the US. But I think just overall macro, right off the top of my head, the countries with a lot of dollar denominated debt, it would benefit them the most because they wouldn't have as much of a burden on their shoulders. And then obviously there's just limitless amounts of knock-on effects above and beyond that. Okay, question. Hi, George. I want to capitalize on my home equity before it's gone. I have 1.1 net equity if I sold today, San Clemente, California, with no cap gains tax below. Okay, I have no debt, good credit. What to do with the money? I'd sell if knew something safe to buy. Well, listen, I would just do the same thing. I mean, with any amount of money, whether it's $1 million or whether it's 100,000 or whether it's 100 million, I would buy 10% gold, gold, and then I'd buy 80% of the stuff that pays you to own it. I'd look around for what's cheap. You guys, that's the good news. That's the glass half full. Prior to the cerveza sickness, there was really nothing, in my opinion, that was cheap that would pay you to own it in the United States denominated in dollars. Puerto Rican real estate was kind of getting there. But other than that, just almost zero denominated in dollars. But now there's a lot of things denominated in dollars that are cheap. So such as the commodity producers, and you can get a great dividend from those. So I would take that out and look around for stuff that's cheap to buy that pays you to own it. And I just set it up the same way, 10%, 80% investing, and then 10% in speculative assets that might not pay you to own them, but you see as there's great asymmetry. So maybe a lot of the commodities, uranium, maybe some of the producers that don't pay a dividend. I think Bitcoin, great asymmetry there. Gold miners, another example of something with a lot of asymmetry. So that's kind of how I'd set things up. And then I'd always look for real estate. Always, 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 always. So I would kick tires. I'm not saying just go right into a linear market right now and just buy at any price, but I just keep looking, just trying to find a motivated. So it's going to be very, very hard, obviously, because we're in a huge bubble. But that's not to say that it can't be done. And then I'd try to lock up that real estate in the linear market in a good neighborhood with a 30-year fixed rate mortgage. And then you're just getting paid to short the dollar. And so as long as you position that intelligently with the rest of your portfolio, I think that you're going to do well. And just pay attention to what we talk about on this channel. Read Lynn's most recent paper for sure. And check out Rebel Capitalist Pro. I'll throw a shameless plug in there. I don't think there's anything you can do better for your financial future than to join Rebel Capitalist Pro. Obviously, I'm biased, but I basically set up the investment vehicle that I wanted for myself. So that's probably what I would do. I'd definitely look at some diesel trucks if that's kind of what you're, sounds like kind of that's what you enjoy, and that's maybe where you have some skills. So yeah, I'd love to throw on 2 or 3 tough to cash flow them though. It depends on how comfortable you'd be with like that amount of physical gold, but that's kind of where I'd start. Okay, question. The Great Reset happens. How will having assets outside the system like gold, crypto, silver, legal, illegal, how would it be for personal benefit if everything is tracked? It's a great question, Chris. I think that in the developed world, cash is going to go bye-bye pretty quick. But you know, the good news, and most Americans don't realize this, but there's a lot of countries where they can't ban cash. Not now. And they can in the future, in 5, 10 years, 20 years. But there's no way they could ban cash like they can easily in the developed part of Europe and the United States and Australia, New Zealand, Japan, China. You're just dealing with a whole different set of people when you start going into Ecuador or Colombia. I mean, you go to Colombia and I don't know the percentage right at the top. It depends on how urban you get. If you get, just strictly in the urban areas, I would say maybe 50% of the transactions are cash still. And once you get into the rural areas, it's going to be, like 100%, like 99%. It's all cash. And 50% of the population doesn't even have a bank account. So it's going to be a real tough time for the central planners and Klaus and his buddies to have them go digital to a central bank digital currency when 50% of the population doesn't even have a bank account. So I'm not here to say that it'll never happen, so don't worry about it. I'm just here to say that different countries and different economies are further down that path than others. And if you want a plan B and you're worried about those things, in my opinion, it's better to set up a plan B in a lesser developed country that's not as close to these draconian measures that are going to infringe on our liberties and freedoms. How it plays out in the more developed countries, I don't know. I mean, I just compartmentalize them because I can see them banning cash. I can see us all having an account with the Fed. I can see the central bank digital currency. I definitely think that's going to be here. As far as what they would do, I think a lot of it depends on the price. If gold stays under 5,000 an ounce, especially in just nominal terms, I don't know that it has that much of a target on its back. Bitcoin, same thing. But if gold goes to 10,000 an ounce, then it's going to have a bigger target. Same with Bitcoin. If Bitcoin goes to 100,000 or 1,000,000, it's kind of like be careful what you wish for, because then the central planners are going to come in and really see it as a threat. So I think that's kind of how you got to weigh the odds and the probabilities. You have to calculate in your own mind where you think the price is going to be at any given time. If we have a contested election over a month or so, will that precipitate a sharp decline in the market? Will other asset value prices be affected as well? I think it really goes back to what Lynn has been saying this whole time. And I mean, she just nailed it. She said that it's all about stimulus. That's the stock market right now. So if you get this gridlock with the politicians where they can't pass another stimulus bill, or they won't, then you're going to see the natural course of assets actually come to fruition. And the natural course being deflation, prices going down. So what we saw in March from the stock market, that's where the prices naturally want to go. They want to deflate. We live in a deflationary environment because of the debt. the reason why people like myself or Lynn or maybe some others are a little more on the side of stagflation instead of deflation, because we think that the amount of money that's going to be created due to circumnavigating the Federal Reserve Act and all of these other kind of restrictions that we have in place right now, they're going to just ignore those, and they're going to print so much money that they're going to get that inflation. But if it stays confined within the system we have, the natural course is prices going lower, especially for assets. So if we don't see a stimulus, if we see this gridlock, if they're contesting it, I don't know that the market goes down because of the social unrest or the uncertainty. I think the market goes down just because there's no stimulus. Now, if we get this uncertainty and they somehow get more stimulus out, I don't know how that would happen. I'm really not I don't really understand the politics of it too much. But if they were to inject another $3 trillion into the economy and the market sees this, then I think it's bad news is good news type thing. And and Schiff has talked about this a lot, where he says that if Biden wins, it should be bad for the market because he increases corporate tax rates, but that just means they might just go and do more. I don't know how they could do more QE than they're already doing, but maybe they do more QE or another $3 trillion in PPP, or who knows what they'll call it, or they'll go to a UBI or something like that, and the market sees that, just goes straight up as a result. I think we've really gone from a Fed put to a government put. That the Fed, I don't really think, can backstop the market. We saw that back in March. Maybe they can, but it seems like that's old news, and the market has gotten such a drug rush from all of the stimulus it's received from the Federal Reserve. And maybe that was legit. Maybe it was just all psychological, like Snyder would argue. But I think it's kind of had its limit, that now there's maybe kind of diminishing returns with whatever the Fed can do. And they've got to kind of hand the baton over to the government. So the fiscal side has to take over. And that's where we see the ability to push the markets artificially higher. So I think it really goes back to the stimulus. And that's why I've been saying on Twitter, if you're long the stock market right now, if you're in one of these index funds, one of the 60-40 split, that every financial advisor is going to tell you to go into, and that's how they're going to tell you to set up their portfolio, you're not long the stock market. You got to think that through. You're long stimulus. And if you're long stimulus, that means you're long central planning. I don't know about you, but I think most of the people, the Americans that have a portfolio and this 60-40 and have a S&P index fund, I think if you ask them directly if they're big fans of central planning and more government control, they wouldn't just say no, they'd say hell no. But yet it's ironic that inadvertently that's what they're betting on. They're betting on central planning. After all these years of seeing it fail all over the world, they're betting that for the United States and for the stock market, it's actually going to work. I don't know. I don't know. I'm not personally, I don't want to go long central planning. I like to short central planning. Maybe not go short, but I like to sit back and just watch it from a distance. I don't like to be a part of that on the long side. That's a good question. How do you personally deal with the pressure when you had hundreds of employees depending on you? You've got to, you can't think about it too much, because if you think about it and you think about the magnitude of what it means and how instrumental your decision-making process is to the lives of so many people, it'll just start messing up your head, and you won't be able to make good decisions. You gotta ignore it. It's hard, and I don't think very few people can do that. I could for whatever reason, but it's not for everybody. And that's why a lot of entrepreneurs, they're great at startups, but once they get over like 5 or 10 employees, it's not their cup of tea. And not just for this, but for a lot of different reasons. You gotta, it's a very atypical person mentally that can handle those types of pressures consistently on a day-to-day basis. And for whatever reason, I could, but I got a lot of gray hair. I got a lot of gray hair, and it can weigh on you, especially when you got a startup, and a lot of times you don't have a lot of cash reserves, and sometimes you got to put payroll on the credit card. And if you guys knew how many times I was this close to going bust in several businesses that I had, it would just blow your mind. And you got to dig deep, and you got to just make it happen. And fortunately, almost every time I was able to pull it out, and we were able to be successful. But it separates the men from the boys, so to speak. And obviously, I'm not excluding the ladies. It separates the women from the girls as well. So you just got to go out there and do it. I wouldn't let it get in the way of you being an entrepreneur, because just understand that along with the success and along with the money comes a ton of responsibility. What was the best period in history for people to live according to the libertarian ideals? I mean, I think you got to look at when the United States was formed. I mean, or maybe late 1800s. That's what I'd say. In the United States, the concept of the United States was extremely unique, and it was an awesome idea. And it's very unfortunate that we've strayed so far away from the principles that were used to set up this country, and the Constitution and the spirit of the Constitution. It really doesn't mean anything now, but back in those days, it did. And I think that's one of the main reasons why the United States flourished as it did. And I think that along with the fact that we just allowed everyone to come in, and if you came here kind of by default, you were a rebel. You were a rebel capitalist. I mean, think about that. How many people right now, if there was a new country that just opened up and had all of this opportunity, but no rule of law, like you just go there and just, it could be a windfall for you. It could change your life. You could get rich, but on the same hand, you could get killed. You could starve to death. You could do anything could happen to you. How many Americans would just pack up and say, yeah, I'm gone. See ya. Very few. But the few who did would be the people that would really be able to make a difference in that country from a standpoint of entrepreneurship and just bootstrapping it and making it happen. They're the people that don't care about having 100 employees. They're the ones that can make those tough decisions with all that pressure. So that's another thing that was really unique about the United States, is we kind of took all the rebel capitalists from the entire world and brought them to one place with, at the beginning, very little rule of law, unfortunately. But then we gave them a system to just go out there and make it happen. And we saw what human ingenuity can do in the 1800s and with the Industrial Revolution and whatnot. And I wish we could go back. I wish people understood the value of having limited government, rule of law, but where the rules don't change very often, and very limited government and sound currency. If we could go back to that, it would be very, very painful for 3, 4, 5 years because of all the debt in the system and the misallocation of resources and just getting rid of all of that, all of the malinvestment in the system. But if we could, it would be, the United States has a lot of things going for it. The infrastructure here is incredible. The highway system, people take it for granted how much of an advantage that highway system is. And they also, the entrepreneurial spirit we have in the United States, I think, is really second to none. But we've got a lot of problems, unfortunately, that are trying to push down all the tailwinds we have. So all right, guys, make sure you're starting your comment with the word question. Tommy, hey, what's up? Tommy boy, I haven't seen you in a while, man. Thanks for coming on the live chat or the live stream. It's great to see you. I hope you've been well. You ready to see these markets fall? Well, I don't know. It depends on how much stimulus we get. That's what it's all about. If we get the stimulus, it's kind of the government put. If we don't get any stimulus, yeah, I agree. They're probably going to fall. That's what, if you got to use your handicapping system and you got to use some game theory, it's just all about the stimulus, in my opinion. What would I do if I only had 10 grand? I know it sounds crazy, but I would flip trucks. You could take that 10 grand and turn it into 30, 40, 50 grand in a few months. Just boom, 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 boom. If you know what you're doing. I would just, I don't want to go into it on the live stream, but I would just try to find, specific, not just any truck, but you got to go look at 95 to 2002 diesel Fords and with a 7.3 motor, or the 460s could be good too. You got to get them in a no rust, low miles, clean Carfax, and buy them cheap on Craigslist from someone who doesn't know the value, or locally they don't have much value. Like the 460s in California right now are free because gas is so expensive. But the good old boys in Pennsylvania, where everything's rusted out, they'll give you double what you pay for it. So way back in the day, I was stuck here in the United States for about a year. I was bored out of my mind. So that's what I was doing just for fun, just to keep myself busy. And I was making probably, I don't know, 30, 40 grand a month just doing that without that much capital investment, like a little more than 10 grand. But you can just work your way up. And once you figure out that game, then you can parlay into real estate, because it's the exact same game. You're managing the same type of people. It's just identical. So that's what I would do. And then that's how I kind of build up my war chest until I had enough to where I could really start allocating capital and create this investment portfolio that could work for me long term. And it doesn't have to be trucks, by the way. Just learn something, whatever you're an expert at. Just my one of my best buddies has his youngest son. He gave him like $500 to go to Walmart and garage sales to buy things locally and try to negotiate the price down and flip them on OfferUp and eBay, and just to train him to have that skill set, because he knows that if he can give his kids that type of skill set, that they're never ever going to have to worry about money. They might not be rich and billionaires, but they're never going to have to worry about putting food on the table or paying their rent if they have that skill set. And he started teaching his oldest son that when he was like 14, 15. And now his youngest son is doing it at maybe 16 as well. So I think that's the best thing you can do is learn that skill. And it's just I know the way with trucks, so that's why I always mention it, but you can do it with anything. Yeah, I kind of answered this question before. When do we go to the digital dollar? What happens to gold? I think you're going to see a digital currency, a central bank digital currency within, I'd be very surprised if you didn't see one within 3 years. But it all depends on what happens with the stock market. Because if I think about all the people at the Fed, it's hard for me to imagine that they're just all in the back pocket of Klaus and the IMF people. Maybe they are. Maybe I'm naive. But I can't imagine that all Mar, I can't imagine that there's people there that don't see the problem with that long term. So I think, maybe they'll hesitate. What's going to prompt them into action is if we get the stock market going down. If they cannot have the stock market go down, they cannot have asset prices going down. Now, I'm not saying that they can control it, because look at Japan. Japan tried to control it. They didn't have any luck. Their market, now it's been up recently, but asset prices fell and fell and fell and fell, regardless of what their central bank did. And the central bank did a lot of the stuff that the Fed did back in March and is still doing today. So I'm not here to say that they have the power to do that, but they're going to try. They know darn well that the entire economy is propped up by asset prices. I mean, it's so obvious to anyone who is paying attention. So if the market goes down by 20%, 30%, and everything they're doing isn't working, and they're trying to get stimulus out to the people to get them to spend it, that's not working because there's some sort of, it's cumbersome, or they're having problems with the transfer mechanism. That's going to prompt them just to get, because they're going to be desperate. And if they're desperate, they're going to be like, okay, we got to do something. We got to do something fast, 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 fast. And I think that's going to bring on a central bank digital currency a lot faster, because that would allow them to inject the money directly into the economy a lot faster and a lot more efficiently. So, but then if we don't have a stock market collapse, if fiscal spending actually works and just keep running these $5 trillion deficits per year, and the Fed just continues to monetize it without any quote unquote problem, and they just keep like Burke says, my buddy Jason Burke, it says just stagflate, tax, and lie. So if they can continue to stagflate, tax, and lie, and the markets don't go down, and keep in mind they can go down in real terms, and I think that would almost bail them out. It's as long as they don't go down in nominal terms. That's where the rubber meets the road for the Fed, I think. So I think that it's coming regardless, but the faster we have another stock market collapse, I think the faster you're going to see the implementation of that central bank digital currency. Oh, I just had a question and this thing skipped on me. Oh, question. Do you still buy oil stocks? Is it cheap? Is it going to go even lower? I don't know what, I haven't bought any recently. I don't know where the price of, let me see what the oil price is right now. So I just always use this chart on macro trends. Looks like we're at 35. So if we're at 35, I don't know. I'm not as excited about it as if we're like under 20, like we were in March. I don't know if you've watched my videos on this. It's in the name of the person, Milos, but if you look at a chart of oil adjusted for inflation, you see that anytime it gets under 30, it's pretty cheap. Anytime it gets under 80, it's pretty expensive. So I just like to be a buyer under 30 and a seller over 80. And anything in the middle, okay. I'm not too excited about it unless I've got a lot of cash that I need to deploy. And then I'd maybe think about it a little bit more. But I mean, if we were if we were under 30, especially if we're under 20, then I'd really get excited about it again. But if I have to put money to work, then that's probably where I do it. I want to make sure I clarify there, because it's hard for me to give just blanket advice to everyone, because everyone's situation is just completely different. So it's not investing advice. I just come in here and kind of try to brainstorm what I would do for my own personal portfolio. Is Bitcoin the government globalist hedge created by them secretly? I don't know. I would have a tough time with that. I just don't think they're smart enough to pull that off. I think only the private sector is smart enough to make that happen. I mean, that's looking at the glass half full. And I don't know if you guys heard my interview with Art Berman the other day, but he made the great point, because I was talking to him about the Great Reset and all this top downs nonsense where they're trying to micromanage the economy. And I'm like, do you think that their intent is malicious? Do you think that they're trying to, this is just a power grab for them? Do you think it's intentional? Or do you think that they're just kind of crazies who are, maybe they actually believe what they're saying? And he said, in his opinion, they're just morons. They're not really, they're not Dr. Evil. Like I always kind of make fun of them and say that Klaus has Mr. Bigglesworth and stuff like that. Obviously, I'm poking fun at the guy, and he's more than welcome to poke fun at me if he wants. But when you get serious conversation about it, you kind of go back and forth. Well, is it that he just really wants global domination and the Cantillon effect, and he wants to enrich himself because he knows he's closest to the money printing? Or does he truly believe in what he's saying and he thinks this is the best way to a better future? Then you got to ask yourself if that future involves depopulation. I don't know. I can't get in the guy's head. But Art seems to think that they're just complete morons. And there's a lot of evidence to back that up, because if you look at government, they're incompetent. And that's the point that he was making. He's like, how could there be a global conspiracy when these politicians can't even tie their own shoes? And how could this be a secret? Or how could they be executing this plan when they can't even execute mail delivery? They can't even execute on a website for Obamacare. They can't do anything right. They're completely incompetent. We know that as rebel capitalists, but yet we also get concerned that this is all their game plan. So it's you got to decide. Do you think this is their game plan and they're executing? And if so, they'd be incredibly competent. Or do you think that they're completely incompetent and they're just fools running around that they don't know what they're saying? And I would probably guess it's somewhere in the middle. But everyone has to handicap that differently based on their research and their belief system. So my point is I don't know if I'd give them that much credit to be able to figure something like that out. Maybe I'm wrong. But I sure hope not, because I think Bitcoin really represents what we're all about. It represents a decentralized approach. It represents the individual. It represents the people. Like my buddy Robert Kiyosaki says, that gold and silver is God's money, but Bitcoin is the people's money. I think Robert has a fantastic way of just distilling things down into very simple terms. And I think, yeah, I mean, it makes a lot of sense. So I sure hope not, but we'll see. Okay, so I think where are we? 45 minutes. So we got 15 minutes left here. I think I accidentally skipped all the way down to the bottom, so I got to find another question. Oh, do you hold some cash as a percentage of the portfolio? Joe Biden. Hey, Joe, I thought you were giving some sort of speech right now. I think that's really dependent upon what people's objectives are with their portfolios. And that's why whenever I do the 10-80-10, I never include cash, because I always say that is the investable, or that's what you have invested. I like to see it set up like that. Now, that's not 100% of your portfolio. Some people would want 50% in cash, some people 10%. It really depends on how concerned they are with inflation and the loss of purchasing power the cash may have while it's just sitting in the bank or in short-term T-bills or something like that, while they're waiting for an opportunity. Another cross current there is how much you think, what you're trying to buy with the cash. So if you're trying to buy assets, then the question is, will the dollars you have or currency, will it depreciate against those assets? That's a different question than will it depreciate against groceries at the store, at Trader Joe's or whatever. It's a different question. Will it depreciate against the euro or the peso or the yen? So those are all different questions that you have to ask yourself when you're trying to think about how much dry powder in the form of your local currency you want to keep. Another thing you got to think about, if you're kind of a traveler like I am, or what are your expenses denominated in? I mean, when I was in Colombia, as an example, although I had assets that were denominated in pesos, and the peso went down dramatically against the dollar from 2015, or actually not from 2015, but from 2000, I don't have a chart in front of me, roughly 2012 to 2015, and it's kind of stayed at that same level. But the peso got crushed against the dollar. So you'd think, oh my gosh, George is really hurting. No, that was great for me. That was awesome, because all my expenses were denominated in pesos. I don't care what's going on with the dollar. In fact, I had a lot of cash flow coming in dollars. And what ended up happening is my payroll was in pesos, but I was making a lot of dollar income, cash flow. And so my payroll was getting cheaper and cheaper and cheaper and cheaper. And then my assets were and I had hard assets denominated in pesos. So as the peso is going down, those things are going up in nominal value. They're staying consistent with the rate of inflation. So my purchasing power is going through the roof. It's another cross current that you got to think about, is what your expenses are denominated in. So most people watching this, I'm sure their expenses are denominated in dollars, but that's kind of how you got to think through it. It's not just a simple, oh, I think there's going to be inflation, therefore I don't want to hold cash. Or I think there's going to be deflation, therefore I want to hold 80% of my portfolio in cash. It's more nuanced than that. What are my top undervalued long-term plays? Commodities. What's your current portfolio allocation? I don't even know, because I very rarely look at my portfolio. I mean, I look at it like once every 6 months, if that. But most of it's going to be stuff that I bought back in March. So uranium, gold miners, oil producers. I can't remember what else I bought, but that's what I think is most undervalued right now are commodities. And you can look at a chart of commodities relative to the S&P 500, and you can see what I'm talking about. They're at all-time lows. So, and then I think obviously 30-year fixed rate mortgages are extremely undervalued. Figure that bond interest rates are at 5,000-year lows. So if the interest rates are at 5,000-year lows, the prices are at 5,000-year highs. And so you don't want to be in the lending side of that. That's for sure. So if you don't want to be on the lending side, if that's really expensive, then you want to be on the borrowing side. And if you can borrow at a 30-year fixed for 3% on something that pays you to own it and pays your mortgage, I think that's undervalued. The problem is the underlying asset is super expensive if you're just looking at American real estate, but you can take out the equity. And again, this isn't personal advice because you're getting a little cute here. But if it were me, I might play around with that equity, take it out, term it out over 30 years, fix it, and then maybe buy something that's paying me to own it that's pretty darn cheap, like an oil producer. And it might not be an oil producer inside the United States. And Rebel Capitalist Pro, we always talk about Luke Oil. We, meaning Chris and Lynn and myself and the members. And Luke Oil is an example of a Russian company that probably is our favorite. So for those of you, definitely check that out. But that's what we've been talking about, among many other things. But so that's what I think is undervalued right now. Tobacco might be undervalued too. I'm interested in tobacco. I hope the prices come down on that a lot. The best performing stock in the entire stock market going back to 1968 was Altria. And the best performing sector since the mid 90s was tobacco. So obviously more, I'm not a smoker. I don't like it, but we're here to make money. So I think it's interesting. And last time I checked, they were paying like a 7 or 8% dividend yield. Altria was. So that could be interesting. But like I said at the beginning of the live stream, prior to the cerveza sickness, there was nothing cheap, nothing. And now there's a lot cheap. So there's some opportunities out there for sure. When I always do my videos and I'm talking about the stock market being in a massive bubble, I'm really talking about the S&P, the broad S&P. I'm not talking about little niche opportunities here and there. Yeah, what happens to the dollar if they go to a digital currency? Not much, Rob. It depends on what they do once they have the digital currency and how they get those newly printed bank reserves out into the system, and how do they increase velocity. Because just going to a central bank digital currency, which obviously they'll just call the dollar, it doesn't do much. You got what it does a lot of is take away your personal liberty and freedom, because the biggest difference in what we have today as far as digital dollars, just using your debit card or whatever, is that we would all have an account with the Fed. And so the Fed would see, or the government would see in real time, every single transaction occurring in the United States between customers and businesses, back and forth, back and forth. They would see every single transaction. So they would, that you want to talk about big data. I mean, then they would crunch those numbers, and then it depends on what they do from there. So if there's not enough inflation, then they say, okay, we're going to give everyone stimulus checks, and that's going to go to your phone. I don't know where my phone is. So that's going to go to the app on your phone, let's say. And then if they don't see inflation running hot enough, then they say, okay, you get your stimulus check, but you have to spend it within 30 days. And, you know, I started talking about this a long time ago. I started maybe even in 2000. In fact, I probably did start talking about that in 2019, as far as, I don't know which videos, but if you go back in my video library, I'll bet you'd find quite a few that talk about a central bank digital currency and then putting an app on your phone and velocity. And now it's like mainstream. You hear everyone out there talking about it. So I was kind of way out on the fringe back in 2019, and now I'm just kind of like right in the middle. So my point is, it depends once they implement it, what they do. Do they increase velocity by saying you've only got 30 days to spend it? Another thing that's interesting that no one's thought through, and I haven't spent a lot of time thinking about this, is what's on the other side of the Fed's balance sheet. So you got to think about this. They've got assets and liabilities, and okay, can they have negative equity? I think they can. I spoke to Lynn about this the other day, and she was saying that there is precedence for central banks having negative equity. So I guess, but how does that work out with the Federal Reserve Act? Not that they even pay any attention to it anymore. But you see what I'm saying? If the Fed creates all these bank reserves and just puts them into your account, therefore it goes to your Fed app, so you can spend the Fed coins at Starbucks, there's no offsetting asset. When they're doing currently, when they create bank reserves or do quantitative easing, they buy an asset from a primary dealer bank or a bank under the Fed's umbrella, and then they print the bank reserves, which are a liability of the Fed, to buy the asset. So when you look at their balance sheet, now they've got an additional, let's say, $1 billion in liabilities, but they also have an additional $1 billion in assets to offset the liability. If all they did is just print bank reserves, then they very quickly they'd have negative equity. They'd be insolvent because the liability side would grow, but the asset side doesn't. So I don't know how logistically that would work. It's I guess what would happen is the government would just have to issue treasuries for all of that stimulus money, unless they merged the Treasury with the Fed. Maybe that's what they'll do. Then I'd have to think about how that works with their balance sheet, or maybe they just go negative equity and they just to hell with it. Who cares about the balance sheet? I don't know, but it's something I think, you know, now we've gotten to the point on my channel and you guys watching that okay, I think we were way ahead of the whole central bank digital currency thing. We saw that one coming a mile away. Now we're kind of here, and everyone else in the mainstream is kind of, okay, now they get it. So we need to take the next step, and we need to think through what's next, so we can always kind of be ahead of the game. And I think that's what we need to play out in our minds. We've got to use some game theory there to figure out, okay, assuming they want to keep their balance sheet, because see, it's all about confidence. And although they could go negative equity, I don't know what that does to the confidence in the markets. And do they get concerned about the government put or the Fed put if their balance sheet's all completely whacked out? I don't know. Or maybe they don't even care. I mean, when the Fed just did all these special purpose vehicles, that was completely antithetical to the spirit of the Federal Reserve Act. And no one cared. They were just like, yeah, whatever. They're ignoring the Federal Reserve Act. That's a stupid old document, just like the Constitution. So maybe they won't even care. But but my point is, I think we need to start processing that and figuring out the probabilities of what may happen, so we can be ahead of everyone else in the mainstream that's just catching up to what we've been talking about for the last year. And that's what hopefully I'll continue to do on my channel. All right, so we'll take one more question. I'll go to the bottom. Okay. All right. Okay. So I guess here's one we'll end with. When are you going to have Harry Dent on the show? I've reached out to Harry. He's good buddies with Hartman. And so Hartman gave me his contact details, and I reached out to him a few months ago, and I didn't hear back from him. But I'd love to talk to Harry. I really would. I know he's down in Puerto Rico as well. I didn't see him down there, and I didn't really have time to try to look him up. But yeah, hit him up on Twitter. Just let him know that I'd love to talk to him. I'd love to interview him. I mean, I've got a ton of respect for him, and I'd love to talk to him about demographics and how he sees things playing out. Obviously, he's on the deflation side of it, at least the last time I heard from him. So I'd really be fascinated to get his views on that. So if any of you guys know Harry or just mention him on Twitter or something like that, I'd love to talk to him. So guys, make sure you go check out Rebel Capitalist Pro. I like to pitch it a couple times here on the live streams. It's the membership program I have with Lynn Alden and Chris McIntosh. And if you get the chance tonight, I would highly suggest going to Lynn's website, go to her blog, it's all free, and check out her most recent article on a lot of the stuff we've been talking about, on QE, how it works, and the fundamentals of base money, broad money. And once you start to understand that, you're going to be able to handicap whether you think inflation or deflation is going to be a part of our future. And when I'm talking about that, more specifically, consumer price inflation. So the gas prices, the grocery prices, just everything you buy on a daily basis, is that going, or the price is most likely going to go up or down? I think once you read her article and understand it and internalize it, you'll really be able to see the whole macro picture a lot more clear. And to the point where I think I'm going to do, I like that article so much. Every article she does is fantastic, but this one, I know she's been thinking about for quite a while. So I'll probably do a whiteboard video on it this week. So definitely stay tuned for that. All right, want to do some shout outs here for everyone. Oh, and if I didn't give the website for Rebel Capitalist Pro, it's georgegammon.com/pro. So check that out as well. Okay, so shout outs for everyone that's hanging out until the end. Oh man, we got almost 1,200 people on all the way to the end. Very, very cool. Thanks for hanging out with me, guys. We got Tony, Brendan, John, Red Draken, Raymond, Metal, Interdimensional Lizard. All right, I love some of these names. Awesome. Martin, Pedro, Alicia, Jung K, VK Travel Log, Daniel, G May, giving the middle finger to the world. Oh man, it skipped on me. He was giving the middle finger, I think, to the World Economic Forum. So yeah, right there with you, buddy. Randy, we won't say that. Okay, that's I almost got myself into some trouble with that one. Okay, Ryan, Metal, The Last Chapter, Fatal 9998, and Fernay Hill, I can't pronounce that one. Eric, good to see you, buddy. I'll see you on the member live stream here in about an hour. Michael, Seb, Donald, Identity Block, Jeremy, Anthony Hill, Andrew, Bill Brown, Kaylee, Flattery, Raymond, and R Web 5678 gets the last shout out with a good stiff drink time. Dang, it bounced on me. Oh yeah, there it is. Stiff drink time. Got it. All right, guys, have an awesome evening. Hope you enjoyed your weekend, and I will see you on the next video.